Vincenzo's Gold Crypto Investing, where you like, subscribe, and share for a one-of-a-kind, company-made, probability-based trading alert, technical analysis, company philosophy, and we are your most trusted and voted source for cryptocurrency and blockchain technology and breaking news and market updates in the YouTube realm, in the YouTube sphere, in the cryptocurrency universe, right? And you can see I usually trade these as a counter indicator down here. Technical sell. If it says sell, usually that means buy. If it says strong sell, usually mean that's a strong buy, and quite the flip. Strong buy means strong sell. Neutral is neutral. Buy is sell, right? I usually use them as they're like a lagging indicator. They go bullish after the market's already pumped, and they start to go bearish after the market's already tanked, right? So if we look here at Ethereum real quick, we can see, let's get this out of the way, bam, let's zoom out. You can see where we're at in the 5-year, zoom that. You can see what we've been doing in Ethereum is we've almost been forming sort of a ascending triangle, right, up here, which would be a very bullish pattern. So I don't think that's what we're in, but we need to get some of these lines out. This is a very old chart. Get that out, get that, and get that out. And we're going to put a fib circle, and we're going to take it from a swing low to a swing high. Swing high was right there. Current time frame, we are at the right about there, and then we're going to go ahead and lock that, right? And then we're going to take them down to the 1 bar. And these are your areas of upper resistance, right? That's how those act. Those act as upper resistance. Then we're going to go from a swing high to a swing low. Get that on there. Get them on the wicks. Although I like these candle bodies, right? But we'll go with the wick right now for the point of discussion. And then we're over here. We'll put that there. And then we're going to change the color. And then we're going to lock it. Right, so now we got that as an overview. And these are going to act as supports on the way down. They can act as resistance on the way up too, but they're very good at support on the way down. And that's why we always start from a far out time frame as the Vincenzo's Gold Crypto Investing trading rule, because it helps you understand where the price is coming from to have any kind of probability to figure out where the price is going to go into the future. Right, you got to know where the price came from, and you can see now, like we just told you, the green would act as good support zones, right? And let's look as we zoom in, has it acted as any good support, right? We did that from the monthly just now. And look at this, it acted as upper resistance, like I said it could, but then look at that, support, 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 pump, right? And then it came right back down to the green ring, right? And then it pumped, green ring, down, green ring. So it's been acting as very good support. Support once, support twice, a whole group up here, and then back here. I'm sure if we zoom out, that was all support right there. So you can see the fundamentals of the ring system just at a glance seems to be working, and it lines up beautifully with our upper resistance. Look at these, we're already on there. That lined up beautifully with this upper resistance at 31,000. Hit it, rejected. Then we had a lower support at 2,300, and it hit it. And those were already there from our old lines, but we put in the fib circles from swing high and swing low, and you can see how beautiful those work, because the fib circles are a great easy way along with your volume indicator to get an understanding where the price is going. So then you can see the blue ring, we were figuring it would act as resistance, right, on the way up. Let's see if it did that on the way up. Absolutely, resistance, 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 right? Every time it hit it, it can continue to break up over it, but it always hit resistance. And then we put the green rings in there because it acts as another balance. So we pump up on resistance and then blow through it. Hit upper resistance on the green ring, or on the blue ring right next to the green ring, flushes, comes down the blue ring, right? Fights back over. And then instead of going straight up to the blue ring, we have green rings here, and you can see the green ring rejected it briefly this time, forced it back down to the blue ring, and then it pumped. But where did it pump to? The blue ring, just like it did over here, and briefly got rejected and then continued its way up. Brief rejection at the blue ring, and then straight all the way through up to the next blue ring. You can see the ring systems work. That's why I put them on there. They give you support and resistance zone, and they allow you to play the field before the timetable on the match gets to where it's going to go. It allows you to see into the future quickly and easily, right, and get you out ahead of the competition. And that's what we try to do here. And this is just one of the indicators that I show you on the screen often, right? And because I try to show you the simple indicators, right? Very easy, clean chart. We have moving averages, the 50, the 100, the 200. We have two FIB circles, usually swing high to swing low to swing high. And then we love to use the volume indicator, where we go from the beginning to here, and that gets you to your major traded area, and you can see that's way down here in Ethereum. And then I like to put a white support box, right? And also a white support box is where the major traded area is, because that lets me know where big moves can happen, should happen, and usually happen and come down to on a flush. And this is where all the volume is. So this is a major area. So we're going to go ahead and lock this, right? We're going to go ahead and lock that right there, because that's a major area on the way down. And we're going to put a price target, because eventually, unfortunately, we're probably going to end up touching at least the top part of this somewhere out into the future. We'll put it out towards the end of the year at $275, and that is where I'm going to start buying Ethereum. I do have a little Ethereum that was donated, and I will be collecting Ethereum, as that is one of the coins that I think at the right price is a good buy. But I think it's coming down here again, and this is a great accumulation zone, just like all back here was a phenomenal accumulation zone, and I think you're going to get that again. Right, you're about to break some critical volume up here. As soon as you break that, there's really nothing else in the buy category to hold you up until you get maybe here where there's slight buying, but really right here at this candle, $400 and $500 even, because look at all this buy volume right here, right? So that's where I think you're going to go. And these are simple indicators you can use to predict the price of Ethereum. And if we zoom in now to the hour time frame locally, you can see your upper resistance on any pump is the 200-day moving average, or the green ring right here, and your lower brief support is the green ring underneath. And then if you drop down on Ethereum, there's really no support until you get all the way down here to the next green ring, which is at $1,500 if you break, right? So you got 3,100, your upper resistance. We'll move that to the current day now. It's actually 2,800 because the ring's descending, and the current day that we're in is your underneath overhead resistance. Your brief underneath support that you have to hold is $2,569 right there. If you fail to hold that, you're coming to $1,500 on any kind of pump. You can see even this one was right online. Bring it to current time frame, it's $4,900 on a major pump, which is not forecasted, which is more likely is after you dance the next few days, by the 6th, 7th, by the 8th, by the next day or two, you're going to have to break this and either shoot way up or you're going to shoot way down in Ethereum. And a breakdown on the way down would be a 42% flush, and that might be a nice swing trade area down here, right? So that's what we're looking at there. Let's make sure this is still recording. And it is. 8 minutes on Ethereum is way too long. So that's what's going on in Ethereum. The Bitcoin, you can see it bounced off the orange ring that we were trying to tell you about. We told you your support zones to look at, where the first one was the blue ring at 40,000. If it broke that, it would go right down to the orange ring. And we told you on the way down now, this is bearish. We got both the 200 and the blue ring, but we told you you could get a slight bounce here, and it could even come all the way up to back test this blue ring and then get rejected, and it's coming down. But we knew there'd be some kind of a bounce. If you watched the last few videos, we told you this orange ring would most likely be an intermittent stop here, where the price would get stalled out before it continued to flush, because we do know is if we move these price labels into the current day, this one's just floating out of here in the middle of nowhere, so we're going to get rid of that. Your upper resistance right now is this blue ring at 41,000, because it broke it now, and it broke the 200-day, so it's bearish. The 200-day would slither over here if the price got there, right? And then your extreme major critical underneath resistance is, what the fuck is that? Is this $38,000 level, right? And if you break that, you're coming all the way down here to the bottom part of the white support box for a double bottom that you made back there. And this is where you're going to go on your underneath flush. If you can't hold this orange ring, and this is kind of where I'm hedging, right? I think it's more than likely going to break down, and that is a 17% flush in Bitcoin. So that's what you need to look out for, $38,884 on the orange ring. If you break that, you're coming pretty quickly back down to here. Upper resistance is the 200-day moving average and this blue ring at $41,169, right? So that's what's going on there. Become a member at Jabroni Killers. We've got about 10 members now. I got lots of videos going to be going out on there in the next couple of days. Trying to get it done. We're going to get a lot of work done today on the channel, as I didn't have to work today. Only have a couple of obligations. And we're going to be getting a lot of stuff done here, right? And XLM, you can see it bounced again right off of the, on a crash yesterday. We told you on the way down, if you're in this coin, this is your major bounce zone. You have your sell orders underneath that, right? And if you're getting real risky, don't care if you lose a little bit more, you have it underneath this last pump right there. See that? You have it underneath that last pump and you're good. And this thing actually bounced off nicely like it should, off the 17-cent support zone, but it's coming into the moving averages now. And I have a feeling that you're going to hit these, and with a continuing descending volume right here on this pump, and the only time you get a nice little volume pump is when the price is rolling over. I think this is going to be bearish, and I think we're setting up for a pretty big fall, as we got about a week and a half left, 2 weeks of trading in the market before the Fed talks, so there's still a lot of sell pressure to be had, right? So I'm very bearish until the Fed speaks, and then maybe we could have some kind of return rallies after he speaks, where I think he's going to say, as I gave my members the Jabroni Killers on Fiscal and Monetary Policy Fridays last week, or 2 weeks ago on the first one. I got to put out yesterday's out later today, that I thought the Fed would sort of back down, and he's not going to go with a 50 basis point, or if he does, he'll have 150 basis point, and then he'll call off the rest of the year to just 2 more rate hikes throughout the year of 25 basis points, which will ease the markets, as they were pricing in 50 basis point rate hikes 3 times this year. And if they only get 1 or none, all these assets that have been selling off could have some relief rallies, right? The ones that have been hit the hardest. So if we zoom out now, you can see, zoom out a little further, and ADA, brief look at Cardano. You can see Cardano's chart is hideous too. This used to be the man holding the bowling ball in the club foot, right? But you can see we've been having this phenomenal bull run. But unfortunately, this was a rising channel, and rising channels are bullish continuation patterns, or they're bearish reversal patterns, but they happen during a bullish run, right? So they can continue to fly high for a very long time before they finally break down. And you can see you had multiple hits on upper resistance, right? 60 cents, or what is that, 6 cents, and then $1.43. You had another one up here at what would that be, 17 cents on the way up, and then you had multiple hits on underneath support, right? All the way down here was one major group of about 12 cents, right? But what this rising channel is it's a bearish continuation pattern, meaning eventually at the top of the pattern it's going to reverse the other way, but it's bullish in the short term, bearish in the long term. And you can see the short term from when we entered this in April of 2020. For 2 years it rode up this channel, right? And you could have played this by either buying and holding, or buying support, selling resistance, buying support, selling resistance, and then it traded off, and then it came back to support. But if you're playing that now, the pattern broke, right? So if you're playing the pattern broke, and the reason this is a bearish reversal pattern in the long term, but in the short term a bullish continuation pattern, because it moves up. But once it breaks this key area, it likes to fall really quick down. Sometimes they do come all the way back up to back test this upper line, and then they continue to move down. But usually 8.5 out of 10, they come down, bounce around, and they start trading the moving averages down because they eventually have to trade down to the technical target. And in this case, the technical target on this rising channel in Cardano is all the way down here between the 6.69 cents and about 4 cents, right? The bottom part of the shithouse, right? Near in danger zone. Getting your bankruptcy is the technical target. And unfortunately, from here, people in Cardano, a lot of people in my family around the holidays last year were riding the Cardano train because they bought the dump right here, the dip, and they rolled the rip, but they never sold it. And then at Christmas, it was down about 30%. Oh, we're not selling, it only goes up. And now if you're holding that, it's down 69%, or more than that, it's down 71.17% at current price. And that's a big sell-off. But this in the pattern has a lot more to go, and it can come down as much as 98%, all the way back down to the mean of the price. And everyone that thought they were crypto geniuses through this last little leg up, because most of the people didn't have Cardano down here or anywhere back there when it was really cheap. It had a huge rally and got up over $1 right here, and then people started buying it, and the first movers were dumping, and then it came all the way down into here on a sell, and people bought it up. It got down to about 85, 90 cents briefly, and people bought it up leading into the July through the 4th, just after July 4th through Thanksgiving, and pumped it up for 4 or 5 months. And it peaked out with crypto last year, and everybody was flying high, but nobody was selling and taking profit. And now it's all lower than what they bought it at. Same as Bitcoin. Most people bought Bitcoin when it was over 50,000, thinking they were a genius. And when they seen little pullbacks, the arrogance with them, I seen it around town and through the holidays, right? And now they're all now understanding what's going on, and they're trying to buy the dips, but they're raising their average price higher and higher, and they're slowly becoming liquidated. But this has a long way down. As the technical target is down here, it's not going to come straight down. But if you look out and go from the daily to the 4 hourly, you can start to see your underneath targets taking shape, because there's not a lot of volume in the volume indicator right here with volume traded. So as soon as you break this orange support zone, the last line of defense, aka get my shit together to the shit house, it can flush in this black area real quick because there's not a lot of volume traded. The same as when it moved through there, and moved through there very quickly on the way up. But on the way down, you can move very quickly in a 46.69% move. Funny how that ends up on that. You can flush real quick, right? When it takes a long time to flush 20-25% up here north of the yellow support zone, because there's more volume traded. And especially in here, it trades really slowly because there's a lot of volume traded in that area, right? But once you break that, there's not a lot of volume traded, and you can trade really quick from the 6.636 price all the way down to 3 cents, right? You can trade very quickly down there. That doesn't seem possible when you're sitting at 86 cents, but you can go from 86 cents to 4 cents in a matter of a few days to a week or two, which is a 61.93% flush. Like, subscribe, and share to Vincenzo's Go Crypto Investing. Peace and love. Peace and love.